Hello friends, good week. How are you today? This is Vladimir and this is the weekly review for the 6th of February 2012. Well, previous week finished with very optimistic sayings from US market as the job market, right, continues to be better and better during the last months in USA, and more jobs were added to the market. So it gives some bullish push to the market. We saw on Friday the indices like S&P, right, like the Nasdaq, and of course the Dow, they pushed up, and everything seems to be very beautiful. But is that true? Is that real? Well, from my point of view, it's not about the USA now. Yes, the situation in USA seems to be better, but the only fact that the jobs market becomes better is just the beginning. They still have a lot to do. What about the debt? What about the debt they increased every and single time? Everyone expected Bernanke to come with QE number 3 now, as the job market, right, becomes better. Should he do it? I don't think so, and I don't think he will, but I might be wrong here, of course. No one actually can know. But from my opinion, I do not believe the market. From my point of view, it's questions of time only and only until we have a serious market change of direction. And I will elaborate exactly why I think so. Is it going to happen now? I'm not sure. It might play here on the same areas. It might even go a little higher, and I'm fine with that. But when the right time comes, the market is about to crash. Not to correct, to crash. And I will elaborate. I will explain you why exactly and what I expect. So, let's start. Let's start with the charts, and let's see what we have and what trades I think it's better to concentrate on during this week, and most likely during the next weeks. Let's start with the Aussie dollar. Take a look on the monthly chart, friends. That's monthly chart, right? I will shut up for a few seconds and you just watch the charts. What can you see? Alright, you were correct. You can see an uptrend. But take a look on this, friends. Take a look on a possible up move here, and a possible divergence being created here. Imagine what's about to happen during the next months in Australian dollar if it goes higher. Could it reach new highs like 112, 115? Of course it could. But is that real? Is that because the situation in Australia is really good? Or is that because they want to push it higher to confuse the traders before the next crash? Take a look, friends, on this divergence. Do you really believe these up moves? I don't. And from my point of view, soon, very soon, Australian dollar is about to change direction for long run. The situation there seems to be good, but for me, from my point of view, the politics just hide the real numbers behind the chart. And if we take a look on the weekly chart, we can see overbought situation already on the stochastic. Already we can see clear resistance area. One here, the current prices, one little higher, a little above 109, around 110, around 110. Take a look on the daily chart. Look how extreme this divergence is. There are no volumes, and we are very extreme already. So what I will try to say is, from my point of view, the day that the Australian dollar will go all the way back for this trend line is coming closer and closer. This is the time to begin the sell. Could it happen now here on this resistance? Yes, it could. Could it happen a little higher, around 108.50, for example? Yes, it could. Could it go 110 again for a double top for the monthly chart? Yes, it could. But from my point of view, it's limited. with this divergence. And once it's ready, we will get the down move first of all to daily 20 MA and break below the daily 20 MA, which is this line actually, as you can see, right? Break below that will open the doors for lower move for around 103.50, something like that. And that's, my friends, my expectations for the Aussie dollar. As higher it goes, from my point of view, it's just sell opportunity. On the New Zealandian dollar, exactly the same. Let's begin with the monthly chart. If it goes higher, could it create a double top? Yes, it could. But that's what's going to happen next. We are going to have a divergence. A monthly divergence. That's a monster divergence. That's exactly what happened here on 2005. And then, bam! 1,500 pips down move. And that's what I would expect to happen to the New Zealand again during the next months. Several months. On the weekly chart, overbought situation as well. On the daily chart, no volumes. The prices are going up, but the slope of the histogram is bearish. RSI kissing the 80. So friends, get ready for a down move. This is very stiff resistance. If it breaks higher, it might take us even to these areas around the 084.44, the spikes area, and 085.50. Could it happen? Yes, it could. But the higher it goes, the bigger the drop will be. And from my point of view, New Zealandian dollar will make the whole move to retest the long line. This line, the long line. That's what I would expect it to do. First of all, it's about to go and retest, of course, the 20 MA. But then, once it breaks the 20 MA, and once it breaks the short line, the short trend line, this one, the last one, once it breaks it, it will take us the whole down move to around the 080 or even below. So get ready, friends, for several hundreds of pips down move. Pound dollar. Honestly, it's not a pair I would look to touch. From my point of view, there are still more place to go up. Yes, we begin to be overbought here on the stochastic, but it could take us for a correction, 100-200 pips of correction. But well, once it will successfully break above this area, which is 159, once it successfully will break above it, then I believe we will see the pound dollar going all the way to 161. Then I would expect it to drop down, but I still think we have more to go. So a break above, a break and a close, hold above 159 should open the doors to 161. If it does not hold above it and make attempt to break but retrace down, creates a daily bearish candle, then I would consider to sell the pound with 156.50 as a possible target. That's my opinions for the pound dollar. And now let's go for the most exciting things. Euro Australian. Take a look on the monthly chart, friends. We have a monster divergence. Monthly chart. Amazing divergence. Rare divergence. It does not happen a lot. But once it does, it's very, 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 very reliable. And that's what I believe is about to happen. Euro Australian is about to fly up. Weekly chart, same story. Oversold already. Could it go lower? Yes, it could. 121 it could. 120 it could also. 119 even also. But it's going to complete here the daily divergence. Now complete it on most likely all indicators, and then, friends, to start the up move. And from my point of view, somewhere in between 122 to 119, the stop will happen, and we will get the Euro Australian moving up at least to 130 again. So get ready for several hundred pips move. Same story I expect to happen with the pound against the Kiwi. This is extreme divergence on monthly chart as well. Could it go lower? Yes, it could. but the lower it goes, the bigger the up move will happen. On weekly chart we could have a double bottom. On daily chart there is an extreme divergence. I would consider, and from my point of view, this is the time to attack. I believe the pound New Zealand will go back to 195, as the first target, and then to 2 area, 2 exact 2 area, which will take us back to this weekly 20 MA of the Bollinger Band. I believe that that's what's about to happen during the next period for the pound New Zealandian. And now I go for the gold, which from my point of view is the best sell opportunity. Take a look here, friends. The Bollinger, first of all, this I wouldn't say the wedge, but some pattern here was broken down. It means we should go lower. Based on daily chart, that's 3 candles engulfing. You see that? 3 candles. It should correct and then make the drop down. For 20 MA, target number 1. Daily 20 MA is the target number 1. And that's what I would consider to do. Look to sell the gold once it makes any attempt to retrace to around the 1730 or 1740. And the most important that the retrace will be below 1745. If it breaks again the 1745, it could be bullish sign. But as long as it keeps below, I would expect the gold to go to below 1700 within the next several days. And that's my expectations. If it breaks this line and it breaks 1680, then and only then we can consider the gold to go all the way back to 1600. That's my expectation. Very exciting situation here for the gold. I become very bearish for this one. What about the indices? Get ready for the retrace. Same story as the biggest bluff ever. Could it go a little higher? Take a look on the S&P monthly chart. I would not be the one to talk. The chart will be. Look at this divergence. We have 1, 2, 3, 4, now 5. It's about to stop. This up move is the biggest bluff ever. There are no reasons for this up move. Do not believe it. There are no volumes. Take a look on the daily chart. There are no volumes for the up move. Who is buying? No idea. No idea. Probably some robots, probably some traders that still believe for new crazy highs. You know what? It's okay. Let them buy. I will look for opportunities to sell. And from my point of view, the sell will take us to 1280, 85. At least break below this area should open the doors for long run. So with this divergence, look for sell opportunities. These resistances, each of the resistances are amazing areas to sell. The same with the Dow. The same with Nasdaq, which created, believe it or not, new ever high. Take a look. How? How come? How come? Is the situation now better than it was in 2005, 6 and 7 before the crash? No way. How it could ever create a new high? That's the biggest, from my point of view, the biggest bluff ever. Once it stops, we will have the huge retrace. And who knows, maybe we are on our way for a long day bearish market. But for this, first of all, we will have to wait for this long trend line break. Only then we can consider the long down move. But until then, we will stay bearish for a few periods, 1, 2, 3 months. Longer than that, we will have to wait for the critical line, weekly line, to be broken. I can't believe this up move. There are no volumes. There is critical continuing divergence. The question is when it's about to break. Pay attention here, friends. More than 20 candles right straight. It's about to retrace back. How, when exactly, no idea. It's about to happen, and that's my expectation for this week and for the upcoming weeks. And for that, friends, thank you very much for watching this video. Be ready for some great moves. Thank you very much for being here. Have a beautiful week and profitable trades. Yours, Vladimir. Bye bye.